from Secret, the channel for learning about trading and investing. Welcome to Markets. Next week we have a technical chart analysis that we do to understand what happened exactly in the previous market and then try to plan for upcoming week. So this is analysis for tomorrow, June 10th, Monday 2024. So what a dramatic week, hell of a week is another way to say that. Huge volatility was seen in the markets following the election outcome, and market was moving up on exit polls, making the all-time highs, and then it was correcting nearly 10% or something, and then after the election results went from the next day, remaining 3 days, it almost completely recovered and is back at the very top. Let's try to understand. We'll come back to this. First we'll look at the charts. Here we have the cup and handles and multiple flag breakouts, and the last flag breakout is on the way when this major event comes, and it's nullified it and it corrected big time on a single day. It's a 5-year major event that happened, and then a full recovery happened on the very next day after the fall. Same can be seen on Banknifty also, with multiple flag breakouts and then the final breakout going haywire. Here's another view, and we see the same, right? A little more clearer candlesticks, and daily view shows that it was moving within a trend line channel, but everything went for a toss when the volatility hit on the election. Nifty also did the same on the daily charts view. Let's move on to the candlestick. Look at the Nifty's candlestick. This is a hammer with an unusually wide wick size that can be seen on both, and there is a possibility of a hanging man pattern. It may also be concluded, but it's not confirmed one. It could be confirmed if the price moves further down from the next week when it closes. If you see that, then there is a potential for that. Otherwise, you can ignore that, and if the price moves above the high of this very long initial candle, then that's it. You can just ignore that. Banknifty also has a very wide wick red hammer, and the recovery is not fully as much as how the Nifty has done that, if you can see that. But yeah, it's a very unusual candle, and it explains everything: the volatility, the big bear bull fights, and the emotions, the euphoria, and the confidence, and all that is evident from this single week candle. The whole week was heavily volatile, and at the end of the week, volatility crashed down heavily as expected. But this is one of the highly volatile moves in the market that has happened in the recent 1 decade of the or more of the election day volatility, right? And after the COVID, we never had such big moves that happened. That's brokered, and we are always being seen to stay away from that during these days. You may have made money during the recovery, or you may have lost as well if you had played the election results and post-poll results and went euphoric. So this is the daily candlesticks and showing the full recovery and the downfall clearly. You see the fall that happened on the election day, and the market move that happened on the exit poll day, and the recovery that happened the last 3 days of last week. Same with Banknifty also. The last candle is bullish, and it's a wide range. And same with Banknifty also, wide range bullish candle seen there. Bollinger Bands have expanded on the upside, and that's the same that is Banknifty also. Expansion can be seen on the upside, which indicates potential for more up move on the short term. And it's having bullish bias because the price is above the median of the Bollinger Bands, and we'll come back to knowing the support and resistance levels after we just wrap it up. So we had the markets had fallen prey to the election volatility. It moved violently. Did a V-shape, with an all-time high, then V-shaped recovery, right? Sharp falls and all-time highs and everything on both sides. The bulls are trapped. The candle that formed is a bull trap, the hammer with a potential having that pattern on the weekly. And it closed positive finally for 3.38 with 762 points as compared to the previous week close. And it's above the 20 weekly exponential moving average, and the total rallied amounts to 39% from the last March. And it's a couple of handles and multiple breakouts. We've already seen that. Banknifty also went both as volatile as Nifty and moved violently on the both sides and V-shaped recoveries and all-time highs and all that with a range of 5,100 points in a week. And as compared to that, Nifty was moving in a range of 2,000 points in a week, right? Banknifty also formed a bull trap. Candlestick pattern with a hammer. We already seen that. It made 1.73%. That's 848 points more as compared to the previous week closing above the week exponential 20 moving average. In the candlesticks, if you see, it's a 469 points. It's 2% up, wide range bullish candle, and a 1% up, 511. Friday close the Banknifty was not as impressive as how the Nifty had done that, right? But both managed to close positive and close wide range bullish candles about 20 exponential moving average, and the Bollinger Bands are expanding on the upside. So we had a correction of 9.7%. Nifty had almost recovered most of that, while Banknifty is yet to recover some of that, which moved 11% correction, and then it still needs a few more percentage of recovery to happen. But both are resistance at the very top for the hanging man potential. And at the very top of the trendline channel, I think we are slightly cautious, right? Until the reality steps in. The major ribbon is over, but the new gold medal is forming as a coalition, and therefore there will be concern in the market as to how they will be performing with the coalition. And all eyes would be on the key ministry reports that's held by the ruling majority party, and the budgets that come, how the allocations will differ. It is not going to be the same as it used to in the last 10 years. So, expect resistance since the volatility to continue until some more time, at least in the budget, sorry. So, let's get back to see the support resistances here. So, immediately the first resistance will be 23,340 nearby zones, where the all-time highs will be made on the exit poll day. And once that is taken out, 23,500 will be the first resistance, because it's just a rounding number, and it comes close. It comes a little more close. It can move up to the 22,700 or something, because that's what the channel top, the blue color channel top is there once it breaks out from the small channel. So that's the resistances. So after 23,440, it can be 33,400 resistance for 23,400 resistance, 23,500 resistance, 23,600, 700 likewise, until it hits the top of the trendline channel, where some resistance may play. Downside on the Banknifty, the major support could come in at the 20 exponential moving average at 22,655. Then 50 exponential moving average support comes closer at 22,460, actually 61. So natural protection supports will come below that at 22,300 nearby zones, and then 22,100 zones has got the 100 exponential moving average support, and then 38% Fibonacci retracement supports could come in at 21,500, and 21,500. If that's breached, then it comes to the 21,174, where the 200 exponential moving average is there. Meanwhile, 22,000 below the 100 exponential moving average could also act as a support. That's about the Nifty. And the Banknifty, if you'll see, the first immediate resistance will come in at 51,000 nearby zones, so the all-time highs were made previously. And if that is taken out, then 50, that's the top of the trendline channel, and there may be resistances at that zone. Right now, since it has not closed above the 50,000, 50,000 also will be resistance. So 50,000, 50,500, 51,000, where major resistance could play in, and if that's clear, then it can break out at 51,500 and 52,000 respectively. right? The upsides, because it's uncharted territory out there after the trend line breakout. Also, it happens about the 8H. Now, the first supports. 49,000 is rolling numbers are supposed to come in there. That is breached. Then 48,766 is where the 20 exponential moving average is supposed to come in, and 50 exponential moving average appears at 48,250. 48,500 midway also may have some supports. The Fibonacci 38 retracement support and the 100 exponential moving average at 47,600 is a confluence of support, so that can be acting as good support there. And if in case that's breached, 46,500 would be the major 200 exponential moving average support from where the market had bounced back. You can clearly see that the bounce will happen from. That's the last and final major support that's going to come in. But 47,000 big rounding number appears before that, and that could also be major supports ahead of that. So downsides and upsides supports in the Banknifty. I hope it's clear. Let's move it. Looking at the RSI momentum indicator and the ADX trend indicators, this is how it shows in the both indices on both time frames, weekly and Nifty weekly on the left side. So it's weekly, the momentum is rising up. It's in the bull zones and rising up. Weekly momentum is in the bull zones and rising up. And there's some trouble on the daily time frames, because it still has not climbed back to the bull zones of RSI above 68 sideways and rising up. So that's why the short-term momentum has recovered from a big fall, and it takes some time. 3 days may not be enough. We need another Monday or a couple of days more for it to climb back to the bull zones. But as of now, it's below RSI 60, and we consider that sideways on the short-term one. Take the charts on Nifty and the Banknifty short. Momentum is climbed in bull zones and it's rising up on both indices on the medium term or the weekly charts. The trend indicator readings is showing bearishness on both time frames on both indices. Right? The bearishness is falling in the short term, but it's it's not that falling. It's rising up in the case of Banknifty on the medium term. But yeah, so the bearish trend has to cross over to the bull zones. It has not happened in the ADX as of now. Probably it may take some more time, just like the momentum has to catch up in the short term. Right, so we got to have a ADX that's moving in the bull zones on both time frames before we can say that the market is back, right? Back in the variety. And then here to be cautious, and we have to be careful about taking further long positions when it's heated up, and then the momentum still lacking, and the trend indicator is also showing that needs some more time. Here, let's try to understand the volatility in the open interest, and volatility can be understood in another way using the India VIX in addition to Bollinger Band's expansion that we've seen earlier. So India VIX had risen up to nearly 30 or about 120 plus percentage of moves that happened in the last 1 month or so, and it crashed down to 32% last week, and it has fallen to the medium-term volatility regime of 16.88. Right, so implied volatility to realized volatility difference spread, if you see it's cooled down to minus 18%, not that much in favor, but much for but loss came out of the previous weeks when it was crazy advantage, but it's the higher risk. Now the EV percentage still at the top, so option sellers would still gain, but yeah, spread difference is not that great. You need to wait until it catches up to 50% with something. Open interest is showing short covering, which is on the futures OI, which is bullish in nature, and it's a long build-up that's seen in the Banknifty. But the options open interest, Banknifty is showing some trouble. It's bearish with respect to PCR, it's 0.73, while Nifty is bullish of 1.4. So Banknifty lags behind slightly on the open interest on the options for the June 13th, 2024 expiry. Make a note of that. Look at this open interest options. Future resistance being built up on both, and a very wide range of speculation is happening for the upcoming weekly expiry just after the results outcome, while the ministry formation, the government formation is all getting sorted out. Nifty, the range is 1,000 points. 23,000 is where the highest put writing is seen, and 24 is the highest resistance, and second level of high support is 22,000. The highest puts are written, and 25,000. 25,000 which are the highest call writing is seen. Banknifty also has a wider range, much more, 3,000 points, and beyond that, it's not 6,000 points range of 47,000 and 53,000 where the highest put and call writing is seen. Support resistances 49,000 and 52,000, again a wider range for the second highest level of puts and call writings. That's seen. PCR and PCR is having some trouble with respect to Banknifty, but it's still bearish, but its futures high for the Friday's move is bullish in nature. That's overall. If you just try to summarize, interest is having an unusually wide range. Speculation is still there with respect to call writers, and Nifty is much stronger than the Banknifty is what we do not see with respect to option or open interest, but both indices are showing bullishness with respect to futures or open interest. Let's move ahead and try to see the sectoral indices and how they perform. The IT sector, actually it's not the IT sector, big moves and seen, bullish moves and recovery seen. Almost all the sectors up move. 8.7%. IT is where it moved biggest. FMCG also moved 7.1% big moves. 5% reality recovery. So every single major sector that it contribute makes me to index is up 1.1% from metal, auto sector 7%, auto 7% recovery, pharma 4.3%, FMCG 7.1%, reality 5%. So big up moves, but you just have to wait for placing long positions immediately in the IT and the metal, because it still has to catch up on the daily moments, and still daily momentum in the case of metal sector and weekly momentum in the case of IT sector. So we have to wait for both daily and the weekly momentums to catch up before we can place our bets on the long side on the IT and the metal. But otherwise, all the other sectors are turning bullish now with respect to taking positions on the long side. Auto, pharma, FMCG, reality, all of them have made good recovery, and it's breaking out kind of moves that you're seeing, all of that. Look at this IT cup and handle breakout is what is happening, right? Cup and handle breakout. Momentum trend, both are bullish. Metal also breaking out, and actually it's not very clear about this is, but I'll just quickly go back and show you that. Just hold on. Yes, look at this IT, right? It's a couple handle breakout that's happening, right? It can go and hit the all-time high once again. IT sector is done a remarkable move. Metal sectors are at the very top of the general channel. You have to exercise caution, and you have to wait for the momentum also to catch upon that. Auto, right? Hammer at the very top of the trend line channel. You have to be lightly cautious, but momentum trend everything all-time highs. Pharma, handle breaking out of this consolidation zone at the very top. No breakout could happen. We could place bets because it's momentum bullish and trend bullish, everything. FMCG is breaking out of the consolidation zone. A lot of space to move to the trend line channel top. Equal for the move up, momentum has climbed to the bull zones on both time frames. Reality at the very top, caution, because momentum and trend and everything is bullish. It's still, all big moves have happened. Let's get back to slides. Looking at the heavyweight stocks that contribute maximum to the indices, HDFC Bank still falling slightly short of getting into bull zones, but big recovery, big fall, and 1,460 it is recovered back to 5,173. Still some more recovery of 30-40 points remaining, but it's still sideways, right? It has not a space to go before it hits 1,700 and above, where it can break out from the previous all-time high. So, overall, things have improved. Momentum has crossed over bull zones. Momentum is just getting in the bull zones, and then things are getting back on track. Hopefully, price moves up further from here on the index, then Nifty and HDFC would be the guy who would be breaking out, or vice versa as well. Trend line. Reliance Industries has also behaved just like the markets behaved last week by slipping in the sideways ones and climbing back quickly, but it did not fully manage to climb back in the bull zones, looks like. So there is a potential for a breakout from this flag formation, but momentum just trying to get in the bull zones back. But the strongest one is the ICICI Bank, which did fall and then recovered, but the momentum was intact. The bull zones fell throughout. To indicate it's also bullish. Other heavyweight IT stocks, big recovery candlesticks of green can be seen there. Price has not climbed into the bull zones in the case of TCS fully, but Infosys has climbed the bull zones almost there on the weekly. Connect Bank merge had fall. Last month had falls that happened because of RBI, and it did climb back and then still maintains in wholesale portion, big volumes, but sideways momentum still. That is trying to climb into the bull zones sideways but rising up, and there is a potential for a flag breakout that can happen here. Mid cap index at the very top still full fall and recovery. Full fall and recovery, the small cap also. So across the sector still zones, bullish trends, both. Moving on, let's try to understand what they Fyers did last week. They sold even more, 13,700 crores of sell-off last week and 7,490 crores of buying, saved market. Rest was done by the normal retailers. So mutual fund money is holding the market basically. Longs of the derivatives also moves flattish previous week. So FI participation is scary. They keep on selling like this. Is what is slowing down things with respect to markets up. Let's move on and try to see what the global markets, in the sense the US markets primarily, and the global commodities and the currencies are saying. So currencies, dollar is closed red. Oh, it's not red, it's a mistake. Or is closed green, and it's 0.3% up. So this is the dollar index that we are seeing there. It has been consolidating after the cup and handle, and the breakout is still not happened. Actually sideways and rising up. So it's in a range. US dollar is not creating much of a double, but it's still at the very top. USD closed flat, that's 10% up, and 83.5. It's not that great. It has been in this range and controlled by the central bank since a very long time. Crude oil is 2.3% down. That's a good thing that it's falling down. It had done big opposite 23% earlier towards the channel top, and it looks like it was going to break out, but now have a cold off. That's good for an oil importing country like ours. Gold is also not very far from the all-time high, but has fallen down some 1.5% last week. It is after a 26% or above breakout to the all-time highs, but still the all-time very close to there. Momentum is still bullish, but slightly slipping into the sideways. So we'll have to watch next week's what the gold is happening. If this consolidation zone is broken down, it can fall back badly. Otherwise, if it sustains to consolidate this range, it can further make new all-time highs. But gold not breaking out indicates that people may not be shifting too much of money away from the market. Global markets in the sense US indices, Dow Jones moved green but flat, slightly slipping sideways. Not too far from the all-time high though. Nasdaq did well, and it seems to be breaking out of the consolidation zone. Momentum is bullish, rising up. S&P 500 also closed green, and it's also in the bull zones rising up. So US markets closed green with slightly flattish moves only on the Dow Jones. Otherwise, 2.6 and 1.3% of moves happened in the Nasdaq and S&P 500. So it had done a 5 to 8% of retracement in the US markets, all of them earlier week, but in the election week, nobody focused on the US markets. But for week ahead, you can still hope for the US market to stay green because it is at the very top. It is in a zone where there is potential for breakouts very close to the all-time highs, and some of them have already started breaking out in the S&P and Nasdaq. Probably Dow Jones also need to move a little more up towards the all-time high to break also. In a summary, US market green is good for us also because some other market. Gold is not creating much trouble by breaking out. It's cooled off. Giving us some indications that probably things are fine. Crude oil is cooled off, so it's good for us. Dollar is weak and remains weak, but not breaking out and creating trouble. Dollar also is green, but not creating too much of trouble. As of now, just consolidating in a safe zone. That's about the global things, and let's move ahead and try to see what actionables can be derived out of this analysis. So two stocks, Dabur and Granules India, both on the long side. Let's look at Dabur on the left side. The FTSE index is moved and broken out to the bull zone, so Dabur comes in that sector. And it's a rounding pattern that is broken out finally last week, so maybe giving an opportunity to have tight stop losses. Reason for the entry is big volumes, big bullish momentum rising up, and bullish trend rising up. Right side, Granules India. I really don't know what sector that comes to, but it's forming a cup and handle and it's broken out confirmation. You can make an entry with tight stop loss. If it falls back with the handle of the cup and handle pattern, just exit. One is decent and big. When it was risen to the RSI above 60, trend also has crossed up the whole zones. Granules much stronger than the Dabur actually looks like chartically. Right, just two stocks on the long side for the next week. Another actionable is on the options trading, weekly trading option strategy. It's a beer call calendar spread. It's having a very good POP, prompt profit, and very less margin is required. You can, according to capital size, you can increase. This is for one lot that is shown here. RiskReward is not that great, but you don't need to keep it till the last day. You can exit any day when you get too near to this 1% or 2% of profits, right? The thing is, it is giving a very good range of up to 23,750, and there is no loss on the downside. That's the beauty. It's well interest defined, and one side is completely safe, and it gives good profit as well, right? That's why we can sustain in case things go wrong, but for some reason or other, for the next week, the market decide to retrace, right? And let's wrap it up. Market fell today, as I said before, it was a huge election volatility with price hitting all-time highs and crashing down and then recovering once again. Zoom down, up, so all kind of moves. But finally, market is at the very top, about 20 exponential moving average. But at a resistance zone, the correction has happened so far as 10 to 11% about the indices, right? From the lows, domestic total correction from the lows. I consider the previous swing low of the March 2023, and the rally has gone to 32 to 39%. The bull rally from breaking out of the cup and handle and rounding flag patterns. We've already seen that, so let's try to bucket out, see what things are in favor of the bulls and what's in favor of the bears. So few factors: 20 exponential moving average above price close, index cooling off, recovery of all the sectoral indices, gaining complete momentum in the bull zones. Heavyweight stocks still remaining strong sideways, none of the mid-bear zones. Right, across the major heavyweights that contribute maximum that we're talking about. We're only seeing that. The crude oil remaining in favor, US market staying in green, mid cap still recovering back to the all-time highs. PCL is bullish on the Nifty, and short covering build up is seen in the future. So all this is sort of bucketed in the bull side and the bear side. Indices need to climb back in the bull zones. It's still rising and it's in the sideways without the momentum, and it's bear, so it's in the bearish DMI on the trend indicators as well. So that's goes to the bear side because it still has to do that. We may be doing it next week, but still has to do that. The price at the previous resistance on the Nifty, a hangman potential pattern is there, right? We have record. We keep it in record. Banknifty OI is bearish, even though Nifty is bullish. Fyers has been selling, and we are very close to the top of the trend line with potential for retracement. Right? You have to keep that in mind. You just can't ignore the facts that the chart throws at you. Banknifty has not recovered fully from the last retracement, similar to how Nifty has done almost. Still it's falling short, but it's almost done a complete recovery. But now Banknifty has not done that. So basically, market went through a volatility and then corrected 9.7% and recovered most of it, with respect to the Nifty at least, and it's now at the very top of the trend line system. So new coalition government could cause worries. All eyes will be on the ministerial positions, budget outcomes, and how allocations are happening and all that. So there could be retracements, volatile moves, and all that may come in. Up moves may face hurdles, right? As and when it comes, we are slightly cautious. Technically, charts as recovery to resistance zones at the very top is what has happened with an easing wicks, and market view remains to be mildly bullish as per me. So global cues, black swans can create troubles, so be always aware of that. Have portfolio level hedges. Our trade positions level hedges always we are carrying forward overnight. The next week 22,500 and 23,500 is what I am looking forward to on the Nifty, and 48,500 and 51,000 is the levels that we had watched out for the Banknifty. So this 22,000 and 48,000, as long as it's made, market is just consolidating before moves of the next leg. So overnight hedge positions, vertical spreads, and no directional option strategies, no risk defined strategies, basically where to apply. I've always been saying that, and always traders, investors can make use of the dips to buy in SIP mode on good quality terms, good quality stocks for the long term. So there's several strategies that explained in the playlist, so check out that as well on the YouTube. That's all I have. If you like it, hit the like button and subscribe and share it and put your comments if you're available. I'm also present on social medias down, and you may check out that as well for more frequent updates and technical analysis before the weekend. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.